Hey everyone, welcome to another market review. We did go sideways this week, sideways up. Didn't see anything interesting all week. We had some economic data which was okayish, and the next week we don't have CPI data. We usually should have gotten it here, but we do have the FOMC on the 10th, and I think JPOW is kind of fucked. Whatever they do is going to turn out badly no matter what, and that's why I still think we get this action here with the pullback to like 660 and then bounce of it and do the Santa rally. Crypto's looking kind of weak, like getting rejected here. Let me turn the pivot as well. So kind of get it rejecting here, so I think goes back to the low as well. So everything kind of lining up for this VIX getting to that 15 area where it tends to find support when it's coming from a big move up. So yeah, things are lining up to give us that move down. And the interesting thing that happened this week is this one. Basically, yields kind of blew up. We have TLT or 20-year going up 2.81% on the weekly. And I think this is kind of like a warning shot for JPOW. Basically, if they cut rates, I think the yields break out and they blow up. And this is a long consolidation, or a large falling pattern that when it breaks out is going to go big. Got rejected here twice, but now I think there's reasons to believe that it will break out. And this kind of the risk that I think no matter, even if JPOW cuts or the FOMC cuts, then I think we get a negative reaction from yields and they break out and move higher. If they do not cut, the market won't like it. So if they cut, yields break out and go higher, and the market will react negatively to that. If they don't cut, market reacts negatively to a no cut, and yields maybe consolidate here for a bit and don't break out, but the market tantrums because no cut and so on. So I don't think we have a win-win situation. We have a lose-lose situation for the FOMC, and that's why I keep my forecast here. But this is small, like it's nothing. It's gonna be a shorter tantrum, then positive flows kick in, and whatever we go for the year-end rally. This part here is undecisive. I don't know. We still can get it. We could avoid it. We shall see when we get closer to it how things develop. Hmm. But it does feel like we live in the stupidest time. Like yesterday with the Trump FIFA peace prize. What the fuck? We had like EWZ yesterday with a Brazil with a 6% dump because Bolsonaro's son announced he's running for president. Like crazy fucking shit, man. Like, are we living in reality or something else? But things generally quiet despite of all this madness and stupidity. Um, but it looks like we will be getting a bit of volatility next week. At the minimum, a pullback to 675. I don't know if this will play out like this drop to 475 and then recover to 688, 690. It could be down directly to like 660. We'll see how it plays out. Now, looking a bit of the other stuff like the economic part, let's look at employment. A surprise this week was that initial claims came in significantly under expectations. Um, it looks like we are based on this. It looks like we are topping out and we're about to go lower. But it's still problematic for growth. Like we are in an environment where inflation is not going higher anymore because of the effect of the shutdown. Basically, any momentum the increase in CPI had was killed by the shutdown, and we should not have inflation worries anymore. But the jobs market is still not good. So we have an environment where inflation is relatively high, like 2.5 ish, and expected to stay in that way for a while, and the jobs market which is very weak but not breaking down. This means no recession, but no growth either. So growth probably be like 1% max next year, which is still very, very low. And not very bullish in my opinion, but not bearish either. Like not a full bear market, but not going significantly higher next year either. And on the inflation side, this is IMS manufacturing, non-manufacturing prices, sorry, and this is Philly Fed prices paid. And we have a divergence between the two this month, one going higher, one going lower. I think the going lower part is going to win actually. Also looking at reflation, like we've been in a downtrend since a peak in November. So, like I said, because of the shutdown, any momentum that a rising CPI had, I don't think is going to be staying around, and I think is going to go down moving forward. But the baseline is still high, like 2.5 CPI is still relatively high, and combined with the jobs market is not going to give us a significant amount of growth. So all of this combined and the risk from the yields blowing up if they cut, this is like a warning shot. So this is the bond market warning JPOW to not cut, or the FOMC participants to not cut. If they do, I think we get a breakout here, and that itself is going to be quite negative for the bull for the stock market. So I still think we get this move down to 660. So that's it for this week. Again, not a lot of interesting things happening, but enough to hint that this is still going to happen. Have a good one. Bye bye.